So welcome everyone to this webinar on the Chinese healthcare market and ways to enter the market, strategies to do that. So I think this is always a topic that is we have to keep updating ourselves on how to go about this. So I'm very happy to have Nordic Match here today. Marcus and Simon will be presenting. I'm not going to do any more introductions actually than that. So please go ahead and you're already sharing your presentation, so that's fine.
Excellent and exciting. Thank you so much. I can me and Simon will just introduce ourselves. I can go first. Sorry, I have a bit of a cold here, a throat infection, but I think it will be okay to talk. We have actually we have scheduled 1 hour for this. Normally we do them a bit longer. We have a lot of material. Our issue is more to make the material down to slides that are relevant to everybody. We can talk about China and the macro landscape and healthcare for a long time. But my background is from the financial industry, SEB, the Nordic Investment Bank. I spent a lot of years there and been working in the financial industry for 25 years now. And then I co-founded Nordic Match 8 years ago. I have a history of living in Asia before that as well. But we will come into the intro here. But I think Simon, you can just briefly introduce yourself.
Yeah, absolutely. So hello everyone. My name is Simon Forsgren, also from Sweden. I live here in China, so I'm based at the Nordic Match Shanghai office. I've been working for Nordic Match since last year, lived in China for 2 years. I have a background working also in the Swedish financial sector and working on different projects between Europe and Asia. And I suppose that's it then.
Yeah, great. Unfortunately, we won't have time here to introduce everybody. I think we are close to 20 people, but we're happy to do one-on-ones later on, or if you have any questions, then please do reach out to me and Simon here. So the way we will structure this, maybe you can just show the next slide, Simon. This one, yeah.
You mean this one? Yep.
Yeah. So the way we will structure this is go over a bit of the macro development. I'm a bit of a macro geek here, so we have a lot of Chinese macro. We will not bore you too much with that, but that will be the starting point for this, and then go into dig in more deep into the healthcare market. Go into some opportunities, some examples of companies who are currently or have of late entered the Chinese market, opportunities and some pitfalls. So we start a bit wider and then we will narrow it down, and then I think Anna, we left some time for Q&A in the end, right? Yeah, good. So
so we should aim for perhaps going into the Q&A maybe when it's 15 minutes left, something like this.
Yeah, 10 minutes is
10 minutes left. Yeah. Okay.
Perfect.
Good. And please, to make this a bit lively, we are perfectly fine if you want to raise your hand regarding the presentation and have sort of direct questions. That's perfectly fine. Okay, just briefly about the Nordic Match, then you can go back just please, Simon, to the first one. Yeah, so we are an M&A boutique, but to explain it in a simple way, we focus on three things. We do screening activities. So we screen for targets for Nordic and European MNCs. Normally we work with large companies. We work in multiple sectors. Industrial and medtech would be our two main sectors, but then we also do some pure play tech companies and also consumer brands. But 90% of our business is industrial companies and medtech as well. We have expanded of late. We started with China. We have expanded And I think you can go to the next slide, Simon. We have expanded of late as well, so we cover more regions in APAC now. We're actually more than 300 professionals now. Within Nordic Match, we are 20 people, headquartered in Shanghai. China is our biggest market. About 65% of our business is still China, but we have cases in Japan, Korea. Help me out here, Simon. It's also Vietnam.
Vietnam and Indonesia.
Yeah, Indonesia as well, and Thailand we have worked with. So we want to follow our European clients to all of APAC. We work with partners in those countries. We also have entered India last year, a difficult market. China is also quite difficult per se, but normally we are on the buy side. Seldomly that we do represent Chinese sellers, but we also do have cases for where we represent Chinese interests. So I think it's a dedicated team. The team consists of project leaders and analysts. So I think we also do all of our material with Simon and the analyst team in-house. We update that, and you can subscribe also to or follow us on LinkedIn or subscribe to our information lists, and we do send out information what is going on in the Chinese market. The team has been with us for a quite long time, which is good, of course. Quite low staff turnover, meaning that they're used to working with European entities, Nordic entities, and we have represented a number of the largest MNCs in the Nordic region. So I mentioned 3 things. So one thing would be screening. Secondly would be M&A. So we do full play M&A advisory. That's how we make our money, closing deals. And the third leg would be more strategic advisory. So we do think in terms of feasibility studies, market entry studies, fairness opinions. We do dispute resolutions in JVs, for instance, and that the service has grown as well. So that consists of 20 to 30% of what we do. That also covers medtech and life science area as well. So okay, I think we can. Sorry, my voice is a bit messed up here, but I think this will go fine. Okay, we can jump into the sort of the more macro trends then and the recent China development. Before we come into this, I can mention that even though we have been able to grow our business every year, except for 2021, I think this year has been exceptional. We have started 7 new projects since mid-January. It's a lot of inflow, and we haven't seen this inflow since basically before the pandemic, or I think it's an all-time high for us. Obviously, the regionalization trend is one factor. The second thing is, and I told a client this yesterday, that the more crazy, to put it that way, Trump gets, the better it is for Asia. So I think it's a lot of the focus is back on Asia, and the regionalization trend started prior to that. But I think it's become very clear that it's a value creating opportunity now for European countries to be closer to China and to Asia. So it's a good trend for us, and since we are quite niched in our business, and we believe that this will continue. When we talk about the regionalization trend, it's various things, but localizing the supply chain, of course, but being present in the market where you are at. So basically, America's one region, Europe is the second one, and then Asia would be the third one. And then looking a bit into growth in China, obviously we call this an unbalanced structural development. Yes, China GDP is still strong. Can we trust the data that is 5%? I doubt it. But I think that What is sticking out here is, of course, the export market, still too export driven from where they want to be. Domestic demand has been lower. We had the real estate bubble, deflationary pressure. What we have seen in the market of late is that the real estate market is coming back a bit. We're picking up a bit on the renovation areas, looking a bit better. And then, of course, the gigantic tier 2, tier 3 cities are still developing fairly quickly.
Which, if you're not familiar, maybe not everyone is familiar with the term, but key 1 cities are tier 1 cities are the most developed Chinese cities. So cities like Shanghai, Beijing, Guangzhou, Shenzhen, and then you have going down to tier 5 based on level of development.
Yeah.
Sorry, Marcus.
Yeah, exactly. No, thank you. And we do have some systematic risk. Still, there are lots of government incentives. They are, of course, positive from an entry perspective. There are huge incentives. We have the manufacturing upgrade, for instance, where you can get up to 50% subsidies for an industrial company or a manufacturing company. But is this a long-term solution? Maybe not. But on the other hand, the local government are looking at the economy from a different perspective than we do in the Nordics or in Europe, meaning that they're very involved or more involved in the local businesses. Nowadays, there are also incentives for foreign direct investments. China got their first foreign investment law as late as 2021. So one should keep in mind that the system is becoming more equal, even though we know that there have been a prioritization of Chinese companies. They are trying to make this more into an equal play. I think in terms of the last I talked a bit about the geopolitical landscape, and this we can talk a lot about. But I think the visa-free policy is great. I think it's 24 countries currently. We don't hold it in Sweden. We hope it's going to happen this year when we have the 75th celebration of the trade agreement between China and Sweden. Basically, we need more high-level visits to China, and we believe that will come this year. Okay, we can go in a bit more to just digging into a bit of what I talked about here. Obviously, you can see the green arrow here, export-driven market. Fixed asset investments have been going down. Consumer spending has been too weak. And that is what they are trying to sort of boost here now to increase the spending. Chinese culture is more sensitive to changes, I would say, and to risks, meaning that when they see that the housing market is going down, they tend to spend less. And of course, similar to the US, it is a consumption-driven market, so we need people to spend money in China. On the other hand, one could argue that is it so bad that they are export-driven? Not really. When it comes to, I mean, they are still collecting good income. Also, that pattern is becoming more regional, so they are exporting a lot to APAC. As you probably know, China is investing a lot in Vietnam, for instance. And going back to the construction sector, that is one of the markets that is actually booming on the construction side. So Vietnam is an important partner to China, but obviously the rest of Asia as well. And Australia is a big and an important trading partner to China as well. So I'm not going to dwell too much on this. These are data from last year. As I mentioned, we have seen a bit of an uptick here. The industrial production is also coming back up a bit. And due to the US tariffs here, we believe that the incentives will be there to continue exports into APAC, of course, and Europe, which will be more and more important to them. Just briefly on the high youth employment rate, you probably read about that here. Yes, it is a problem for them. We are seeing data up to 18-20%. They are highly educated. I think one of the issues going forward will also be that the industrial sector will be lacking blue-collar workers, because you have a very high level of education, and there are jobs there, but basically the blue-collar jobs, basically the youths don't want the jobs that their parents have had, meaning factory workers. So there you have a high level of automation. There are ways to sort this out, and also foreign players like you take Scania or Atlas Copco or the largest industrial companies have a huge or a high level of automation in China in their factories already. So there are quite big opportunities there. Okay, Simon, we can take the next slide. So this is more, now we go into a bit of we call this it's called the fourth industrial revolution. We are talking about the green energy, of course, digital, and robotics here. As you probably heard of, the lithium battery market is really, it's huge in China, covering a large portion today. They're very good on that side, but also one thing that is interesting, going into more to the life science sectors, is also the published papers, where you can see on the right hand side. There was an article out I think it was this week or last week, highlighting that the Chinese universities will open up more to foreign students again, now than where you have the sort of dispute between the Trump administration and Harvard. So I think the Chinese are always good at finding ways to do business and to attract sort of foreign good staff and students. We have seen a dip here. China was very popular for students, basically from 2010 to 2020, when Simon also studied there. He studied Mandarin. We had a large inflow of students, foreign students. That has not really come back. So I think that they will use this opportunity as well to try and attract more foreign students as well. But it's quite interesting that you see the published papers there, that they have really exploded now, basically the last 5-6 years, and actually surpassed the US. Okay, any questions so far? Oh, still high level macro here. So we will come into the medtech and the healthcare sector soon. But I think this graph is good to highlight. We do a lot of presentations as well. I do a lot of presentations here. I like to show this slide and the next one. We also have had one a healthcare seminar yesterday, and I think there's always questions about the Chinese market per se. This is good, I think, to highlight how big China is in APAC. I mean, as you can see, population-wise, it's half the population, but GDP-wise, it's bigger than rest of Asia. So even though we talk about other regions in China, in Asia, still the markets that are sticking out for a lot of the European MNCs and also mid-cap companies are China as a market. Of course, India is big, Japan, Korea, but Vietnam, Thailand, even Indonesia, Malaysia would be more for production, as it is today. Okay, yeah, so this is also the GDP. Actually, this is going to keep going up. We believe, I think it's 18% now of global GDP. We believe that the US will come down a bit here on this scale, and China and India will continue to grow here. Also, Japan has seen a bit of a growth of late. But as you can see in the bottom line, more driven from after the reform opened up in the 80s, we are now seeing a more consumption-driven, service-driven market, but especially technology and innovation that is driving this. Just one example of that is you take a company like Scania, for instance. Even though it's a automotive company, they have choose to put their R&D center in Rugao, a huge investment. They will have, I think it's 300 to 400 engineers sitting in China. It's the only. Sorry.
Swedish engineers and their families coming to China.
Yeah, exactly.
Exactly.
Exactly. Well, I think it's European combined with
European,
Chinese engineers. Yeah, correct. And it's actually the only country where they have R&D besides Sweden. They have small in the US, but it's a huge investment for a company like Scania. Okay, Simon, we can go to the next one here. And this is also something just to highlight. India as a market. I'm sure that a lot of you are probably involved in India or looking at investments in India. This is just to compare, I should say, China to India. So the middle graph there is that if China grows 2%, not 5%, 2% during these 10 years, 2021 to 2030, that 2% is sort of equivalent to all of India's GDP. So India is still big and it's growing, but it's 18% of China, even though of course their growth rate has been steeper of late. Just to mention a bit of valuations on the market, we follow these patterns and we can see based on PE multiples as well that you look at markets like India today are sticking out as overvalued, very expensive to do M&A in. Yeah, I think we have that on a slide, but
yes, maybe we can go to that one.
Yeah, okay, here, yeah. So I think based on this, we look into this quite a lot, and I think Simon has been part of gathering this data as well. What we can see here is that India, US, and Australia is sticking out. And we believe that why we also see a lot of investments coming back now to China is also based on multiples, meaning that it is today an undervalued market looking at PE multiples, similar to Sweden, right? So China has gone, going back 10 years, 8 years, we had multiples, so maybe 20-25x EBITDA that we don't see today. Of course, we're used to handling valuation gaps, but I think this graph is quite telling on where we are currently in the valuation spectra. Okay, I think we can show one more slide regarding. Let me highlight a bit about let's go to slide the manufacturing upgrade, slide 11. And this is just, I think this could be interesting for you and of course the companies listening in. I mentioned a bit about incentives. This is actually the second time the Chinese government. So this is driven by the central government, even though a lot in China is sort of owned and coordinated from local governments. Central governments do quite huge incentives as well, right? So I think the whole one example here is also we're working with a larger Swedish medtech company who have done a new investment into a new factory, and when they buy their local machinery, they get as much as 40% discount. So this is a sort of a what we can call it a reform, but it's a push from the central government to do local investment, and also to make sure that they are lower on the sort of or higher, depending on how you look at it, on the energy efficiency scale, meaning that they can also save more money on energy. One example is we work with a Finnish company. I think this was 3 years ago. They got the free installation on their, and this is a mid-cap company, not a large co, and they got free installations of solar cells on their factory. And then they do incentives for lower tax incentives, where you can get as low as 15% corporate tax if you are seen as a high-tech company or even a tech company, which a lot of the Nordic companies are, especially in the medtech area. We can just show the next slide as well. Yeah, so basically we look at and this is going into the healthcare sector as well. Sweden is sticking out. Now we're only looking at deals per from the Nordic side. This is not covering joint ventures. I didn't mention that initially. We do, when we say have an M&A, it's also JVs. We have closed 5 deals last year and 3 deals to date here, 2 JVs this year and 1 M&A. So JVs is also an important tool to use, and that is not factored into this statistics here. But we have seen of late that obviously, as you can see here, industrials are sticking out a bit, but then we have the healthcare sector also that is have increased in M&A activities. And of course, we mentioned Novo Nordisk there as well. Company like AstraZeneca has done a lot, and we will come to that later, but done huge investments in China the last 2 years. Okay, I think we can move. Yeah, so just 30 seconds on IPO. This is a chapter by itself, but this is obviously a competitor to what we do. When China got the foreign investment law in 2021, simultaneously to that, they made it quite difficult or more difficult to IPO companies. We have smaller boards in China called NEQ and Starboard. Both of them are holding healthcare companies. What we saw is that they sort of over IPO'd companies going back to 2010, 2012. Similar pattern what we saw in Sweden on the small boards here. But the last 3 batches of regulatory, from a regulatory perspective, they have made it more difficult. So just to highlight a few things, you need online training for that a year. You will be locked in for a 3-year period, and it's very expensive. So you need to hire lawyers from day one. Whereas signing a joint venture or a trade sale to a foreign entity is much more simple. And the stock market has not been delivering on a good scale as a lot of these companies were hoping for. So we have actually seen a decreased trend in China for IPO companies, and we have seen more trade sales, even though we're hearing now that some local governments are now supporting more IPOs again, because it's a feather in the hat for them to sort of have companies within their local jurisdiction IPOing. We have a lot of data regarding this, and we can share this afterwards. Okay, Simon, I think we can go into, you can start here, and we can dig into a bit into the Chinese healthcare market.
Yes. Okay, great. So as Marcus mentioned, we mainly work with companies that are more on the MNC side. And so we can share just some insights that we believe should be interesting for you guys, specifically looking at healthcare MNCs investing in China's healthcare market. So we split it up into 5 kind of main themes that I'm going to go through. So the first one is some key growth drivers that we are currently seeing in the Chinese market for the healthcare industry. Second one is looking at financing trends. So kind of how is the investments flow going into the Chinese healthcare market? Then we're going to talk about some strategy. Why should specifically medtech companies pursue localization in the Chinese market? What's the benefit of that? And also, how are Chinese companies looking to localize in the European market? And what opportunities does that create for Nordic and European players? Fourthly, looking more at the kind of biopharmaceutical market, looking at, as Marcus mentioned, the very strong R&D growth in the Chinese market, and what opportunities that creates for licensing opportunities or strategic collaborations for European healthcare MNCs. And lastly, one structure that we have worked with and that we think is very interesting is to access the Chinese market through different kind of fund structures. So I will get into all of these themes. And also, as Marcus mentioned, if at any point there is something that you would like to ask about or have a comment on, feel free to jump in. Yes, okay. So looking then at some key growth drivers in the China healthcare market. Of course, China's healthcare market is the second largest in the world, still in size, still quite a lot lower than the US market, which is by far the world's largest. But what we do see is that the Chinese market offers quite a strong growth rate compared to the American market. If you look at a projection specifically for the medical device sector, you can see that there's a predicted growth CAGR 9% per year, going up to 2028. And so what are some of the key drivers here? Of course, you have demographic and economic factors. China has a lot of a rising health awareness, particularly in tier 3, 4, 5 cities, less affluent, that historically have maybe had a lower quality of care. You also have increasing affluence among Chinese people, and they are more willing to go for out-of-pocket payments for many devices such as hearing devices, medical aesthetics, dental care, supplements, even things like IVF is of course very important in China. So in these sectors, we see even stronger growth, of course. Particularly, I can mention something like IVF, where we have a very good Swedish company, Vitrolife, that are very active in the Chinese market. They are seeing double-digit growth, I think, every year, of course, in the Chinese market because it's a product that's well positioned for the Chinese market. Another factor is the aging population.
And I think, Simon, just to mention a bit IVF, we're also hearing that they will subsidize this even more, right? Today you have it free, but within your insurance. But there are rumors that they will sort of expand this subsidy and make it free of charge going into 2026 or 2027. Which of course would be an enormous boost for a company like Vitrolife.
Right. Yes, and that's the kind of thing with the Chinese market is that you have to, and we will get more into this, but you really have to find the balance between positioning yourself correctly in the economic trends, in the policy, because of course you have policy challenges such as encouraging buying domestic products. But you also have a lot of policy incentives, such as what Marcus mentioned about insurance coverage, common insurance coverage. But we will get into this a little bit more later. Of course, another very important demographic trend in China is the aging population. We see an increased demand for things such as orthopedics, chronic disease management, rehabilitation, health monitoring, which is an interesting factor where there is a lot of digitalization happening in China. China is really a leader in healthcare digitalization. We also see a expansion of the universal healthcare coverage. So as I mentioned, quality of care is going up in lower tier cities, which is kind of boosting high quality healthcare utilization, which is a very important core target for the Chinese government, is to boost high quality care for the population. We also see that for companies manufacturing high tech innovative devices in China, there are also many, as Marcus mentioned, you not only have these tax benefits, but you can also gain different kind of incentives if you are manufacturing high quality innovative devices in the Chinese market. So yes, can move on to the next slide here. So just briefly talking about the financing. Actually, what we have seen is that in the past few years, since the kind of high point during the early COVID time in 2021, there has been a bit of a downturn in Chinese healthcare financing. This is partially due to kind of American investors retreating from the market, but also just a general economic uncertainty. But if you look at it from a longer perspective, if you go back about 10 years, you see that the market has actually maintained a relatively stable level in terms of the financing amount. If you then look at where is this investment taking place, you can see that the two largest sectors by far is in medical devices and consumables, as well as biopharmaceuticals. This is also, of course, where we see quite a lot of strong growth and a lot of opportunities for Nordic healthcare companies. I should also mention that these other three sectors you see here are, of course, also important. And the digital health one is one where we know that many Nordic companies are actually looking to the Chinese market for quite innovative technology. Also relating to the healthcare financing, if you go back to 10 years compared to now, you can see that there's a lot more financing towards more mature assets. This also has to do with a more risk-averse attitude, perhaps, of investors choosing to go for safer bets. But it's also a reflection of the general maturing of the Chinese healthcare market, that you have more of these high-quality, more developed companies. So, talking then a little bit about the localization for medtech companies. This is something that we see as a core trend currently. Many companies are experiencing challenges in the Chinese market, specifically companies in the medical device sector. One of these challenges is, I'm not sure how familiar this is for you guys, but you have something called the volume-based procurement in China, where essentially it's a policy push from the Chinese government to try to reduce healthcare spending by ensuring that price is the most important factor during a procurement process. Now, there are certain ways to for foreign companies to get around that. One way is to, if your product is in a very premium and very innovative segment, where perhaps there are not many comparable alternatives in the Chinese market, then you can have a still very beneficial position in the procurement discussion. And if your product can be classified as domestically manufactured, you are also favored in any procurement negotiation. So really what we're seeing is a shift from export-driven models to China for China models, to bypass trade barriers, as well as to benefit from local R&D, as well as to leverage local Chinese partners, as well as to get a better position in the procurement negotiations. We have one example here of Fresenius investing here in a Chinese company, also doing dialysis. And this was for them a step in their strategy to localize further in the Chinese market. We also have some MNC examples here. Danaher invested over $100 million in their Suzhou R&D and manufacturing base in 2021. This was specifically also to localize further, to become considered more as a domestic manufacturer, and to benefit from the Chinese R&D landscape. And we also saw the same for Siemens Healthineers, who launched a localization strategy back in 2022 with the goal of producing 80% of what they sell in China in China.
Can I just ask?
Of course, yes.
So if you're a smaller company where it's maybe not feasible to start local production immediately, what should the plan be then? Is it really difficult then to enter the market so that you will not grow and be able to produce locally after some time, or?
Right. I would say that there are a few different paths available. And Marcus, of course, feel free to jump in.
Yeah, sure.
One method that is available is, of course, to set up a kind of strategic partnership with a local Chinese company. So where, for example, this could be one case where you could set up a joint venture. So you can have the technology transfer to this new venture together with a Chinese strategic investor who then has the kind of manufacturing capacity as well as the market access to kind of get this product to market more efficiently. If you don't have the capacity in-house to kind of set up your own China manufacturing, and this is something that I will get to later, kind of navigating the policy or the regulatory landscape for SMEs. But if you don't have that in-house capacity, you don't have those resources, that is really one quite efficient way to do that, is to set up a strategic partnership or a joint venture with a Chinese partner. If you have anything to add, Marcus.
Yeah, but just what would help there as well is, of course, the registration getting through the NMPA, right? That's the Chinese CFDA. So it's called NMPA now. So that's also you can bypass that easier or have the Chinese entity or the Chinese partner filing. So we are seeing this, and the other option would of course be to do a licensing deal instead for a smaller company.
Yes.
Yeah. Time flies here. I think we need to. We only have.
Yes. Sorry. I think there's a risk that we might go a little bit over time. I hope that's okay. But I will try to be.
Let's leave 5 minutes then for, if that's okay, Anna, for Q&A.
Yeah. Sure.
Yes. And we're. I mean, at least I'm available to stay a little bit longer after. What is it in Sweden time?
Yeah.
Yeah. So let's see. But yes, I will try to go a little bit faster here. So what we also see then, looking at the other direction, is that leading Chinese medtech companies are also quite interested in the European market and identifying partners in the European market. We have 3 examples here to the right. And what you can notice is that we're not talking about 100% acquisitions in any of these cases. These Chinese medtech companies are actually quite interested in retaining the local management team and in retaining the kind of local company to be able to leverage them, and in order to mutually build market access both in Europe and in China. So basically what these leading Chinese medtech companies are interested in is, when they look to Europe, is to identify companies that have attractive technology offerings, that have good know-how, and strong market access in the European markets. So this is also something that can be of interest if a European company is interested in, and this could be more for an SME perhaps, if they're interested in raising capital and finding a strategic partner that can help them enter into the Chinese market with their products while simultaneously leveraging their skills and know-how to help the Chinese investor to get a stronger position in the European market. So this is something that we also see happening, and which is also a potential direction to take. And this is driven by different factors internally in the Chinese market. Of course, the Chinese market is quite notorious for being quite competitive, and especially if you're not in the ultra premium segment, then it can really be quite, which of course, luckily for many European and Swedish companies, they are on the very high premium segment, so they sit a bit more safely. But if you're not, competition could be quite cutthroat. And so for many Chinese companies, the solution can be to kind of look beyond the domestic market, where pricing competition is less intense.
And some of these companies are so well capitalized today, so they need to keep investing. We talked to a lot of these Chinese companies, and they are very cash rich, so they are looking for opportunities outside of China.
Yeah. Right. So that was looking more at the medtech market. Let's now have a quick look also at the pharmaceutical market. Looking at the biopharma here. So some key trends that we can mention, as Marcus already mentioned with the scientific papers, China is of course a very, very strong R&D hotspot, particularly I would say for the biopharma sector as something that really sticks out. If you look at the growth in clinical trials from 2012 to 2023, you can see that phase 1 to 3 trial starts in China has gone from 4% of global to 28% global. So there really has been a very impressive growth in R&D infrastructure and expertise in China, particularly in certain areas such as oncology, where China is increasingly becoming world leaders, antibody therapies, as well as integration of emerging technologies such as AI, gene editing, digital with biomedicine. This is of course driven by also governmental incentives, Part of the 14th five-year plan is to prioritize innovation in drug R&D and high-quality industry growth, which is what has driven a lot of this. There's also been regulatory easing, which can be interesting to know for foreign companies. So actually, since last year, foreign invested enterprises can do cell and gene therapy activity in certain FTCs in China. And when it says certain FTCs, it's actually in quite a lot of places. It's in all of the major Chinese life science hubs. So in Shanghai, Suzhou, Hainan, Beijing, all of these foreign MNCs can now work with cell and gene therapies. And they also opened up for fully foreign-owned hospitals also last year, which is quite interesting. And we see this, of course, you can see here below some examples, Merck and Sanofi, but one very interesting one is AstraZeneca, that in March 2025 announced that they're doing an investment of $2.5 billion in Beijing to establish a new strategic R&D center. So this R&D center is not only leveraging on local, let's say, R&D capabilities and hiring local talent, it's also to set up collaborations with leading Chinese companies, which often involves licensing in assets from these Chinese companies. So sorry if I'm speaking quite fast, but I'm trying to get through this. There's some to cover here. So continuing then with the licensing. So we see that there is quite a strong growth in the volume of out-licensing deals from China. If you look at just the trend in the last 3 years, 2022 to 2024, you can see it's gone from 40 to 76. So as we mentioned, China is quite world leading in many of these areas and can produce a lot of the kind of upstream assets that are used to develop different drugs that can then be licensed out to global MNCs to become part of their pipeline, to strengthen their pipeline, to actually develop these drugs at their European facilities.
And we're also seeing more clinical studies being done in the Chinese market as well due to demographics, and it's a quite good market to do that in.
Yeah, also it's a huge market, of course. So with a very large, a lot of people. So that's also a benefit to actually having this R&D take place in China. And of course, as you can see here to the right, very recent March 2025, but quite big deal here, large deal from Novo Nordisk together with United Laboratories, licensing deal for an asset also in the obesity field, with upfront payment of $200 million and up to 1.8 billion if targets are met for this particular drug. So just to mention one area that we think is quite interesting, perhaps you're familiar with ADCs, antibody drug conjugates, that are then used primarily for cancer treatment. So one function they can do is to combine specific targeting of antibodies with tumor killing properties of chemotherapy. And if you look at 2024, you can see that 5 of the top 10 global companies developing ADCs actually come from China. You can see that in the graph to the right as well. So this is one where already in 2025, we've seen a few licensing out deals. And this is something that we believe there's quite a lot of growth potential in for any potential European biopharma companies that want to develop these assets. So lastly, on this topic, something that we believe is very interesting and hope to see more of, and actually we think that something like this will happen quite soon in Europe, based on our knowledge, is a new trend, which is something called newcos. So this is something that has a structure that has been used outside of China previously, but since last year, we've also seen it take place with Chinese companies. So if you take the example here to the right, basically, Hengrui Pharmaceutical have some GLP-1, also obesity-related assets, drug candidates, that they then transfer to a new company. In this case, this is Kailera Therapeutics, which is then an American-based company where Hengrui, the Chinese company, maintain a 19.9 equity stake. But then you have financial and strategic investors who actually do a capital injection and become the majority owners of this company. So basically, you establish a new company with Chinese assets, but with foreign investors, and you establish this company outside of China to develop these assets. So this is something that we believe is going to grow in importance because, as I said, there are many Chinese companies that develop very good upstream molecules, upstream assets that can be used to establish new companies in the European market where the Chinese company remains as a minority shareholder in the new company. So there's more information on this page, but I guess we don't have time to go through it. But we will, of course, send this out. So if you're interested, you can look at it later or watch the recording. So just very quickly then, last point on this information for MNCs. One way to access the Chinese market, if you're interested in if you don't want to commit to a full acquisition or a full strategic partnership, you want to kind of take a broader approach to the market. Maybe you want to get a more diversified exposure. Maybe you want to go into technologies that you're not as familiar with. You can do this through fund investment structures. And three main approaches exist for this. So you have the self-managed fund, essentially just your own corporate VC team, your own corporate venture capital team. You can also set up a dedicated fund with a Chinese healthcare-focused fund, where usually then the European company will be the only LP, the only limited partner. Or you can invest in a Chinese private equity or a venture capital fund, which is, of course, quite straightforward, but then you don't get a lot of influence on the investment decisions. So again, we could talk more about this, but this is just.
And this is, Simon, we can mention, this is a case yes. also that we're working on for a bigger Nordic medtech company.
Yes. Yes, so this is something that we are actively working on, and that we believe is quite a successful model that can become quite relevant for more European medtech companies specifically. So
maybe yes. We should just go to page 31 quickly. This is of course something that the audience can read about 31 and 32. But I don't know if you want to start mentioning something about this as well, the NMPA approval process.
Yes. So exactly. So I wanted to, let me just quickly go back. So I wanted to know just very briefly, because we don't have so much time, and also we have less material for this, but for how to enter the market as a SME. So the previous material was kind of directed more towards MNCs. This is more kind of SME focused and also a bit more focused on organic growth directions. So maybe I can just quickly go through that. So initially, especially if you don't have a lot of experience with the Chinese market, one, of course, key thing to figure out is where in China do you want to enter? They all have all these main areas have different benefits to them, particularly perhaps Hainan, which is something that we'll mention a little bit more about. But as Marcus mentioned, of course, there are different local governmental policies, there are different local R&D clusters, infrastructure availabilities, talent pools. So this is also something that needs some consideration. These two slides are quite text heavy and not very fun, but this is just to give a very brief overview. So as Marcus mentioned, the NMPA, essentially the Chinese FDA, is the regulatory institution that you have to go through when you are registering a new product for sale in China. So this is to give a just general overview. So the main classification types, of course, you have medical devices, chemical drugs, therapeutic biologics. And there are some general challenges for European SMEs to go through this process. Of course, it's quite a complicated process, quite time consuming. There are cultural differences, language barriers, and without the kind of proper knowledge and the local know-how, it can be quite challenging, which is why we recommend to work with some type of partner. Similar to last slide, kind of information heavy, sorry about that, but this is, perhaps you can go through this later if you're interested in looking at the details. But this is also just to give an overview of the registration process. So one thing that we wanted to mention is the Hainan FTC. So Hainan, the island of Hainan, which is, if you look at the map, is located down there in the south, has this international medical tourism pilot zone, where they are essentially expediting market entry for foreign healthcare companies. So if a foreign healthcare company is able to show that they have an innovative product that can display clinical urgency, then it's quite a lot simpler to actually access the Chinese market through the Hainan Free Trade Zone. So what you can do then is that your drugs or devices can become available in the Hainan Medical Tourism Pilot Zone, which can then also act as a stepping stone for a fast-track NMPA approval for the rest of the Chinese market. So actually, by deploying your product in Hainan, you will then be able to collect data and begin the NMPA filing process. So as a first step to get into the Chinese market, looking at it more from an organic point of view, we think that this is quite an attractive possibility that is available to Nordic companies now. So just to very briefly speak about, as I mentioned, specifically, I guess if we were to be working with a healthcare SME, some of the support that we can offer, three main directions that we can see. One would be supporting on a China entry project, more organic, support with kind of China market study, feasibility study, deciding on where to set up the company, navigating NMPA, all these different things. We can also, of course, engage a China JV partner, as we mentioned, or a Chinese strategic investor if this becomes relevant. Since time is running out, I'm not going to dwell too much on this. If anybody's interested in discussing this later, we'd be very happy to have a chat, of course.
Yeah, and I think the last part here, yeah, exactly. Here we are describing some other areas where how you could do an investment. We described the JV, and the last segment in the presentation is also about our process and how we would operate. But I think we should round up there. Here you heard about China Speed. With this in China Speed. We've been talking a lot here, so perhaps we leave some room for questions here now.
Yeah. So, are there any questions from the audience? In the meantime, I can just. One. Yeah. Okay. Sure. Go ahead.
I'll just put my hand up then. Thanks for a lovely presentation. I enjoyed it. Well done. It gives us a lot of background. As a footnote, last year when I was at the Garmin Health Summit, because we work in mental health and support on the medical side with a medical device, and we met an insurance company from China that they were integrating an app which was awful, really. It was looking at the calories in food by taking a picture. And they were implementing that with 26 million of their customers, insurance customers. So I think since we know we have a very attractive product, and Vitality was there selling they're in 30 countries, and they were selling their tools there, and they didn't want us anywhere near them because they said we were too much of a competition.
Okay.
So what that then sparked a huge interest for me to find which insurance companies can we approach with our solution for them with their insured members, right? And if this one insurance company had 26 million, I'm sure there are going to be maybe 10 other insurance companies which could be key targets for us to look at. So I would really like to know more about how you could support us in that area.
That is very interesting. And I can mention that we know that this is something that we know of some companies that are pursuing similar kind of projects here in China. We know one company, for example, working with hearing devices that are right now currently looking into partnerships with some of these large Chinese insurance companies. In a situation like this, of course, as you mentioned, it's very true that there are many large insurance companies in China. And I think the way you would structure it, please jump in, Marcus, if you want to add something. But I think the way you would structure it is as a classic kind of partnership identification project, right? So where we would do an overview of the market, identify all the potential partners, do some initial sounding, what's their interest, kind of think about how can a deal be structured, and then actually go into the negotiations to try to get a good deal structured.
Yeah,
we do these. Yeah, sorry, Marcus.
Yeah, and I just want to add, do you have any local production today at all, or are these produced in Europe and exported to China?
It's all digital. It's a digital solution with mental health and AI support. And yeah, a lot of tools around that with the clinical support in the background. But then you would use Chinese clinical support. You wouldn't use European clinicians, right?
That it's a digital source would actually be good. Of course, we need to look into the Chinese data laws there.
Well, we would separate it. There's no way we could. I mean, we run all our own IP and all of those things, so we would certainly lift it out and we would separate the tools between the European and the Chinese. It would have to be a standalone system.
Yeah, exactly.
Which we would totally, the servers and everything we would keep in China. We wouldn't want anything to be mixed with European data.
No, and you would need the local the servers to be in China anyway. So I think it's But this we could definitely look into. It's an interesting area because also these insurance companies are quite I mean, that's where you want to get in, right? So because of their huge network. Thank you, Clive. Anything else? Any comments or questions here?
Could I just ask about Hainan? It's special because I mean, there are other free trade zones, but this is just especially for medtech and the thing that you can get real world data from there to use when you go further into China. Is that right?
So with the Hainan zone, it's not only for medtech. It's not only for medical devices. It's also for for drugs as well.
Pharma, yeah.
Yes, for all kinds of biopharma. I couldn't give you a just off the top of my head a full explanation of all the differences, but the basic point is that in terms of market access, Hainan, the Hainan Free Trade Zone, the International Medical Tourism Pilot Zone, is essentially the most open, and it's the one where you can have the fastest time to market. You basically don't have to display any kind of the regular approvals or testing that you would need to be able to sell in the Chinese market. So it's not only open in the sense that you can do different kinds of research there, such as cell and gene therapy research, but it's really about time to market and actually being able to sell your products and export without local manufacturing, just exporting these products directly to Hainan, and then using that as a stepping stone for the rest of China. So I hope that answers your question.
Yeah, sure. Well, if we don't have any other questions, I think we should start rounding this off. Yeah. So thanks a lot to Marcus and Simon, and to all of you who have participated, or the audience. And I would also like to mention that we will have another webinar together with Business Sweden on the 16th of May, also a Friday, where Business Sweden will present Hong Kong and the Greater Bay Area and the opportunities that lies there, and also discuss a little bit about a probable delegation trip to Hong Kong and Greater Bay Area later in the year. So I will add that information and the registration link for the webinar in the email that I will send to you, which will also include the link to this recording and the PowerPoint, if you send that to me, Simon. I will also include your contact details in this email that I will be sending. Okay.
Thanks a lot. Thanks for taking the time.
Thanks a lot, and have a nice weekend when it's time for that.
Yeah, thank you so much.
Yes.
Okay.
Thank you for listening.
Thank you very much, Anna, and thank you, everyone.
Thank you.
Bye-bye.
Bye-bye.